Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session. My name is Doug McKay. Each morning we get together in these live go-to sessions and go through the market, take a look at the macro and the micro, take a look at the structure of the market, and then drill down to our trade levels, our targets, and our hypotheses each morning. We do create multiple hypotheses. We trade an if-then-that strategy. If this happens, then this is probable, and then we're going to do that. And basically what we do is we create 4 main hypotheses so that we know what we're going to do, what to look for, and what direction we're going to go based on what the market shows us. We do not try to predict the market. We try to react to the market and have a plan in place for whatever the market throws at us. This is a subscription room, so if you're interested in checking us out, you can send me an email to quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so take a quick look at what happened yesterday. Our main hypothesis was a open auction just in range or just out of range, a rotation up into value, and then failure somewhere inside of value and rotate down and come down. We were looking for a move down to the 64.50, but the buyers kept on stepping in and holding us above. Remember that the 67.25 is the value area high of the microcomposite that we broke out of on the 5th. And just above at 76, I believe, is the value area low of the value area that we just broke out of the microcomposite for the last 9 or 10 days. So our main hypothesis was starting to play out, and then it just fizzled and couldn't hold below the prior day and rotated back up into the middle distribution from the prior day. So kind of a weird day, but we said it would be tight trading because of the fact that we were coming into the Jackson hole today. Of course, let's take a look at the news. 8:30 we had preliminary GDP. Expected 1.1 came out. It was a hit. U.S. goods trade balance minus 62.3. It was better, minus 59.3. And then preliminary GDP price index quarter over quarter came out pretty much as expected. So we got a little bit of a drop on the news. A matter of at the time our low was 72.50 or 72.25, and I don't know what was our low, 71.75, and now they're rotating it back up into the overnight VPOC at 74. The big news today is going to be Yellen. Now I caution, this is not going to be like a normal FOMC day where 2 o'clock they put out the minutes or they make the rate announcement and you have one move. We have Jackson Hole, which is the economic symposium. So there's going to be people that are going to be speaking. Yellen's speech is going to start at 10. You're going to get some volatility coming in before, during, and after Yellen's speech today. So the whole day is going to be, I think, very volatile in terms of it's going to move, it's going to stall, and then it's going to move, and then it's going to stall, and then it's going to move, and we just don't want to be caught with our pants down. Already, the Fed Mester, which is a hawk and a voter, he said, quoted, expected to see strengthening in second half, gradual upward pace in the rates is appropriate. So again, they're threatening to make a rate increase. Whether that comes in September or December or not at all, we don't know, but they keep threatening. I think they're preparing and seeing how the market is reacting to the news. And then we've We've also got U of M consumer sentiment and inflation expectations at 10 o'clock. So just be aware that news is going to be headline news as well as scheduled releases. Okay, and there's our rotation back up into the 74 and back into balance. I always like to start my day with a basic candlestick chart. I use a 9 EMA, a 20 SMA. I'm looking for slope and separation from the strength of the trend and where the trend is being violated. You can see beautiful trend on the monthly, end of 15, beginning of 16, violated the trend, then took it back, and since then we have to look back, and we've gone and made new all-time highs. Trend is in continuation mode on the monthly. On the weekly, we talked about the fact that only once before in the 20 years going back that we've had 9 weeks in a row that were bullish weeks. This is our 9th. Our open of the week is 81.75. So as long as we stay below that, we will get a bearish week, which is expected today, but we don't know. It could be the second time in history that we look at that. So watch the 81.75. That's going to be a key level. If we come up and get above it, they could rally into the close. The weekly is still on a very strong trend. It doesn't even get violated or challenged until we get back into the 21.53, and we've got a lot of repair from here to here. So going to the daily, you can see that we're creating this sideways action. We are below the 9 and the 20 right now, so we're having a possibility of a violation of the upward trend and the possibility of the start of the downward trend. Don't know it yet. We could just as easily pop up, but the first signs are coming into play. And as we move down into the intraday, you can see we do have the start of a downward trend for the last 2 RTH sessions and 3 Globex sessions. We've got a naked cross here on the 4-hour at 82.25. If we do get back above that 81, that's your target on that move above the 81s. I would even say above the 79. Going to the 1 hour, you can see that we've had the strong trend, and now they're starting to consolidate and move sideways, but we are below the 9 and the 20. Well, actually coming up and at a decision point right now with a MA hug, moving average hug. Going to the 30-minute, same thing, consolidation. We're above the 9 but below the 20. They just popped up on that news. Whether we fail at the 20 and get below and get the continuation of what was starting to be a trend down, we don't know yet, but move down to the 9 on the 30 will bring us down to the 73.50 area. And going to the 15-minute, same thing as the 30-minute, and then the 5-minute, you can see that we've got a possible start of an upward trend, but we do have a naked cross down here, and this is going to be a significant one at 21.73. It's 2 ticks above what I consider to be a very key area. It's not going to be our key line in the sand today. That 72.50, which we've been using as the key line in the sand. Why have we been using it? Well, let's go take a look at the bigger picture and the composite. So these are the 2 microcomposites that I was talking about, where we've got the longer term balance. I don't know, I think it was like 19 days or something like that, and then we broke out on the 5th, and the value area high of that lower microcomposite that centers around this 21.6075 is at 67.25, and you can see we've come down and tested that yesterday, 1 tick higher, and then they bounced. The value area that we've been in, that we've just sort of broken out of the value area, well, we're back inside now by a couple ticks, so we're back in this value area, but the value area low is at 73.25. It wasn't there yesterday. I think it was higher yesterday. Yeah, it was 73.75 yesterday. bringing in today's volume. So you've got overlapping levels at the 72 to 73 area. You've got the range high from the microcomposite we broke out of on the 5th. You've got the value area low of the current microcomposite that we sort of broke out of and then back into today. And then you've got the key CLVN right here that separates this upper and lower distribution, with the first target being that 67.25 that we bounced off of, which is a CHVN, and the value area high. Our week low is down here at 65. Oh, is it this week? 1, 2, 3, 4, 5. No, last week's low is 65.50, but that's our range low for this microcomposite, which is sitting right on top of this CLVN. 65.50 now becomes our key line in the sand. So that's our key line in the sand. This is our warning line at 72. You could use 67.25 as your warning line. In fact, that's probably a better warning line. I think we're going to probably cross the 72.50 a few times today as we struggle to see whether we come up into this value or come back into this value based on whatever news comes out. So taking a look at the overnight, we have a pretty tight range, 76 to 71.75, and the 71.75 really was just put in on the just coming into the news, and then we pop back up into balance. So we have a double distribution from yesterday with the key LVN at 72, so that fits with the 72.50. I'm going to be using 72 as a warning line and the key trading level today. I like double distribution days because they're very clear and definitive in terms of your levels. You know, you get above, you're likely to rotate up into the HVN, which was where our VPOC was for a lot of the day. So your first target above is going to be this HVN at 73.50. Just happens to be right there at the 74, which also just happens to be our month open. So our month open and our VPOC from the Globex, which is not like we've got very strong kurtosis here. So we're likely to make a strong move off of the 74. And if we get through the 72, then my first target is going to be the 70.25 area. And then you've got the 69.25 value area low from yesterday. This is going to become a trade area. I'm not going to put a trade area on it because we've got so much there already, month open, overnight VPOC. But if we get above 74, then I'd be looking for a move up into testing the 77. Why 77? Well, if you look at, let's just get the rest of the information off of here first, and then we'll move this over. So our overnight high is 76.25. And that's all the information that we're going to get off of this. Is a very, very good looking profile, very balanced, as expected due to the fact that we're coming into Jackson Hole. We expected them to find some balance. They found some balance around the 74. Just happens to be the month open. So we're fighting the month open coming into the last week of trading. We've only got, how many more trading days do we have? We've got 1, 2, 3, 4 more trading days, and we're fighting the month open. So taking just a look at the monthlies. So right now we're basically got a doji on the monthly, so we could get a bearish month, but we don't know yet. There's still trading right here. So our 20 period daily ATR is running at 13.55, so off of 76.25. Our downside daily ATR target is 62.75. So that doesn't change much, one tick. And then off of the bottom, which is 71.75 so far. I put that in? No, I didn't. This could change too. We've been doing that a lot, putting in new lows or new highs coming into we still have 30 minutes and we're not big enough range to know that we couldn't move 2 points up or 2 points down. But off of 21.71.75, 13.55, our upside daily ATR target is 21.85 and a quarter. That moves up right to that naked close. And that's all the information we need off the overnight. So taking a look at our levels against our shorter time frame, again, if we get above the 74, I'd be looking for them to target the overnight high, and then the 77 is this CHVN is kind of a double distribution between, we've been playing microcomposite VPOC here, and then we got a little bit of an LVN at 78 to 78.50, but I'm going to use the 77 and a quarter, because if we get above 77 and a quarter, we're breaking out of yesterday's range, and we're likely to come up into the microcomposite, which is going to be our target at 79 and a quarter. And then above there, our next key level is going to be 83 and a quarter. That is also just below the value area from 2 days ago. I'm not actually going to use, I'm going to use the 83. You know what? I'm going to use the 84.75. It's the range high. Just going to have to incorporate the 70 down to 73 and a quarter. So you don't want to be short unless you're below 73 and a quarter. You don't want to be long unless you're above 84.75. If you want to be aggressive, you can take the breakout of value because of the fact that you've got the naked close right there at 85 and a quarter. So you can take the break to get funded into taking out that naked VPOC. And then above there, we've got 86. And then really nothing. If we get back above 85 or 84, I'm really expecting a move up into new highs and continuation. So, and that's the levels to the upside, to the downside. Sorry. I'm going to be using 67 and a quarter. And then below 67 and a quarter, our main target below is this 64.50 area. We've got the naked close at 64.75, naked VPOC at 64. And again, this is going to be my key line in the sand. This is, I'm sorry, this is going to be my warning line at 72, my main trade area, but this is going to be my key line in the sand, the 67 and a quarter. Come on. Because if we get below there, I'm expecting a move down. You should be careful. I would even be targeting the 65.50, the low of the this day right here, and the CLVN, just to be careful. But you know, if you got multiples, I'd be running down into here. So those are the levels. All our levels below. Again, let me remind you that we've got a lot of stuff down here. We've got 64.50, got 64.75. We've got the 60.75 microcomposite VPOC. We've got naked VPOC at 59.75, naked close at 59, 53.75 naked VPOC. There's a lot of stuff down in this distribution zone below that 65.50. You could use 65.50 as your key line in the sand versus 67.25, but I think below 67.25 we're going to push through to that 64. I think next time down the 65 is not going to hold, and we're going to push down into the 60s, the lower 60s. So my main hypothesis, well, we've got a news day. So first of all, I'm expecting a lot of rotation. So I'm expecting a rotational day with two sides, coming into the 10 o'clock. But my key hypothesis is an open auction in range, probably just outside of yesterday's value, a move up, and then failure. Okay, somewhere between the 77 and 81.50, and then a rotation down through value, down, take out the 70.25, which will be the key target, but moving down through and into the 64 and move down into 61. I really think we're going to come back before we pop, especially if she hints at a rate increase. I think a lot of it is being cooked in, but a move down to 60 area, between 64 and 75 is where I'm anticipating that we'll hit at some point today. So Hypo 1 is open auction in range, just outside of value or just inside of value, a move up, chop on the open, a move up, and failure somewhere between the 77.25 and 81.50, and then a rotation down, maybe even testing the going up into the range high, but I think they're going to get the long sucked in and then fake them out. So Hypo 1, open auction in range, move, a false breakout or a no breakout, and somewhere between the 77 and 81.50, a rotation finding responsive sellers and rotating us down to the 70.25 and chopping around between there and the 67.25, and then fail and push down and get a move down into the 64 as the next big target, and possible probe down into the 60.75. Hypo 2 is an open auction in range, a move down and a failure to break take out the naked VPOC, failure to break the low from yesterday, hold the 67.25, and then rotate up through into the 81.50, chop around in the 81.50, and then get a late day probe up into the 85 to 90 area and close somewhere in here. Maybe even put in a new all-time high. Hypo 3 is going to be different. It's going to be opposite to what Hypo 3 and Hypo 4 has been. Hypo 3 is going to be an open auction in range, fail to get below the 70 level, and then rotate up strong into the 81 to 85, and then push through and go and make a new high and test the 2200 and close somewhere up here just inside the 2200 or just outside the 2200. But Hypo 3 is key component, is a move to the 2200 at some point in time. And then Hypo 4 is an open auction, failed to break out of the range, rotation down, chop around in the lower distribution, and then push down through and get a move down. And the key target on that is going to be somewhere between the 59 and the 53, and get a test of the lower side of this distribution zone here, and coming back into that prior value area, and testing the lower side of that value area between 53 and maybe even the 49 in a quarter. So those are my 4 main hypotheses. Remember, it is Friday. I always caution on Friday going into the weekend with losses, but more importantly, today with the Fed, you've got to be very careful that you don't get chopped up, don't get stubborn, because I think you're going to see a lot of two-way action and a lot of violent moves that are just going to come out of nowhere. Somebody's going to say something, and algos are going to kick in, and we're going to make a move very quickly. We've got heavy liquidity above and below us. We're right inside of overnight balance, so we're likely to get a very choppy open. So be careful. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.